That's right.
Hang tight, guys. Oh, well, at least we're on while you are working on that. We're having an issue with camera one at the moment. There we go.
There it is.
All right, we got camera one on the screen now. Welcome everybody. Thank you so much for joining us. We're excited to be on with you guys today. I am Tony Cimino. I am the VP of Business Development here. I'm joined by one of our senior business advisors, Tim Steins, as well as Emily, who represents our marketing team. And we are excited to get rocking and rolling and get a chance to chat with you guys, get a chance to interact with you guys. Today is really not one of our prototypical webinars. So we have a very limited schedule for you guys. No presentation, none of the normal stuff. We're just going to kind of peel back the onion a little bit, get a chance to chat with you guys. If you can, you already see some people in the chat. Shout out to all of you guys already in the chat. I'd love to know who you are, where you're calling in from, and whether you how you heard about today's webinar. Would love to know. Always good to get to check you guys out in the chat. Shout out to Sandra from Texas. Shout out to Gina from Huntington Beach, California. I see Miami, Florida. Cav Turner out in Michigan.
Nevada, Oregon, Austin, Texas, North Carolina. We're all over the map.
Oh, yeah. I'm sure we're international on here at some point. Shout out to Jim Moore, a regular on these. Love it. Kansas City, Missouri.
Jim might be more regular than you are.
He might be the only person with more webinars than Tony. That's a good point. Shout out to Albert Franco, longtime partners here. So shout out to you guys that are already working with ROK. Shout out to those of you that may not be working with us just yet. That's what today's call is all about. So we had a chance to poll some of our successful partners. We sent out like a quick email poll that allowed us to put together a brief, some brief talking points, I guess we'll call it, right? But we definitely want to get a chance to interact with you guys. So do me a favor, if you have questions you want us to answer, feel free to utilize Zoom's Q&A feature. You can drop your questions into the Q&A. We're going to be getting you guys all these answers. I see in the chat it's talking about an echo. Do you guys all hear that, or is that just one person? Is everybody picking up an echo? Yeah, I didn't think so. We tested the sound beforehand, so sorry about that if you're experiencing the echo. And if it gets too annoying, don't worry. You can always sign off, and we'll send this to you through the recording and check it out on YouTube after this. So real quick, shameless social media plug. If you're looking to check out our prior webinars or looking for some more information on a specific topic, feel free to jump into ROK's YouTube channel at ROK Financial, ROK_financial. Emily's going to help us out with that. Give Emily a round of applause, guys. Emily is getting rocking and rolling from behind the camera to in front of the camera now. We're going to make her be the on-air producer of today's show and get a chance to have her interacting with us. She did a great job to set everything up, but now we're going to kind of turn it over to you, Em. We're going to let you get rocking and rolling. We're going to let you take the reins. As much as I'm not going to let that happen, I'll let it happen. And Tim and I are excited to get chatting here.
Absolutely.
If you guys have ever been on a webinar with Tim and I, you guys know we could talk to the screen with the best of them. So we're excited.
Yeah, I wanted to throw out there that I don't think I had the proper introduction that I should have had. Tony usually throws a nice little king crown on my head as an introduction, but I've been with ROK for about 7 years now. I've been under Tony's team for about 4 to 5 years. Even led the department with Tony at one point, which was a great time. Over the past year and a half, 2 years, I've focused more on business advisory. So I'm excited to share some insights on what I've seen in regards to the lending landscape today, some of the experiences, some of the positives that I've experienced working with customers that are looking to get access to financing, and hope everyone takes a lot and attains a lot of information from it.
Yeah, absolutely. You kind of took what my answer to the start is here, where I was going to kind of break down our roles, but all good, all good. We jumped ahead. We jumped ahead. It's all good. Emily, what do we got first? What do we want to hear about first?
Yeah, so do you guys want to give an overview of the commercial finance landscape right now for clients and affiliates?
Yeah, absolutely. I just want to check the chat really quick. I'm getting a little static in my headphones. I just want to make sure you guys can hear us all good. And I'll jump in definitely. All right, cool. As long as you guys can hear, I don't really care. It doesn't matter to me. We don't need to hear. We hear each other every day. No, but really quick overview of not only the commercial finance landscape, but I'll give a quick ROK overview and kind of talk about each of us and each of our roles a little bit. Emily, for a long time, has worked on our marketing team. She's been in a few different roles for us. Right now, she heads up social media. So if you jump over to our YouTube and you subscribe, brownie points for M here. So make sure you like and subscribe on our YouTube channel or our Instagrams, or even join Tim and I directly on LinkedIn or any of the platforms that we're on. We're huge on social media. It's where probably a lot of you guys heard about ROK Financial. And then once you kind of join the team, you get what it's all about, right? And we're really just people helping people. The economy changes, what banks and lenders do change. The one thing that's a mainstay is the three people sitting here and ROK Financial. We're not going anywhere. We're going to share the information with you guys. We're going to let you share that with your business owner customers and allow that to be the way that we do business, right? We believe the only way to do business is the right way. So as far as the landscape goes for affiliates these days, it's a very interesting time to be in and around commercial finance, because the reality is so much moves so quickly. But some of these products and services, they may take a little bit of time to catch up, and that's always kind of been the case, right? Banks and lenders are always a little bit slower to go into the hot markets. They're always a little bit slower to go on kind of some of the cooling things. So we're going to go into some of the more specifics here. My role specifically is to talk to you guys, the affiliates, those of you that are rocking and rolling alongside us, choosing to work with ROK, whether you're representing our brand or you have a white labeled experience or even a co-branded type of thing. We love working with all of our affiliates, and the main goal for us is to, like I said before, share information with you guys, right? Information that's pertinent about the products that we offer, about who we're helping, about what those products look like. I'm not going to pretend to be the know-it-all or the end-all be-all, especially with Tim sitting to my right. We used to joke that Tim's the underwriter. So I know he's got a ton of insight to share with you guys when it comes to products and industries and insights and just kind of what's happening on the front of the front lines here. So Tim, go ahead, jump in, man.
Yeah, for sure. I mean, I think when it comes down to it, we as a company have noticed that over time, there's always going to be new products and new needs for different types of loan programs. And, when we first started in this industry, Tony's been in it a good 4 or 5 years longer than me, maybe longer. But it was predominantly very unsecured focus. It was MCA, it was line of credit, it was term loan. And when it comes down to it, there's some businesses that come in that already have access to that product and are looking for additional products to coexist alongside of it. And when you think about financing in general, I mean, the entire basis of unsecured financing is financing that can coexist with traditional debts and with senior debt financing. So, I think it's evolved a lot over the past few years. There's more customers coming to us that own real estate, whether it's residential or commercial, more than there ever was. And on top of that, we as a company are always looking to introduce new banks, new lenders, new products, so that as affiliates, no matter what it is that you're coming across, we hope that we can be a mixed bag and be able to offer whatever solution it is that each respective client's looking for.
No, that's a great point. You know, one of the things like that you mentioned was the industry, right? And we refer to it as the industry. The industry that Tim's referring to is the fintech industry, right? So it's financial technology, and the evolution that's happened in finance is due to the technology and the increase of tech. So I'm definitely excited to dive in a bit more. We have a ton of great stuff for you guys. Em, what do we got next?
Timmy, this one was for you.
Honored.
What is the biggest shift that you've noticed in today's market?
Today's market, it feels like there's things shifting every single day. You know, when I was first learning this space, I learned a lot through the SBA, and the SBA does these monthly or quarterly reports where they talk about what SBA is lending to, what they're not lending to, and why. And it turns out that, you know, when you're looking for an SBA loan, there's a lot of industries that are restricted. And what they go off of in restricting those industries is actually previous default rates. They look at companies, they look at the average lifespan of how long that company's open for. And for sake of example, transportation is one of the businesses that the SBA is not too fond of, primarily because a lot of people start in that industry and are not able to make it past 5 to 6 years in that industry. And an SBA loan is typically 5 to 10 years long. So if you're looking to provide a financing instrument for a business that typically has a life cycle of 5 to 6 years, you may have trouble getting an SBA loan if that term is going to be longer than what a lot of businesses are in business for, right? You know, on top of that, I think that businesses are always looking to allocate capital in different directions. We speak with marketing companies that are looking for financing for payroll, and we speak with manufacturers that are looking for financing to do marketing. You know, I think when it comes down to it, the use of funds is shifting a lot. And I think that when it comes to the financing that we offer, we like to say that the use of funds is almost universal. It doesn't matter where the capital is going in your business. It really just matters on how much you can qualify for and what you're looking to utilize that at. So the utilization of funds, I feel like, is changing a lot, specifically with things like, you know, AI and marketing strategies and client acquisition, but it feels like it changes every day.
No, and I would agree as well. And I'm going to make a comparison to the universe, right? The universe is ever expanding, right? I would tell you that commercial finance has been ever expanding as technology has continued to pour into things, right? Tim talked about when we were getting started in the industry and who was doing what and what that kind of looked like. Well, today, what I would tell you is there's more creativity in the market than there's ever been. There's more unique style transactions happening. There's more niche lenders. Hey, we only do restaurants, or we only do deals in California, or we only do this type of business, right? You know, we only do this type of equipment finance, right? Like there's so much specificity, there's so much customization, right? And what that leads to, if I'm being honest, if you're an affiliate or a business owner, is paralysis analysis. You're never going to meet a bank or lender that doesn't believe they have the best product for you. Even if they don't service your market, they're going to be telling you, oh, well, you know, you can always get this through us, and like eventually we'll be able to do that. Like, no, the reality is you got to be able to kind of see through the BS and look at the facts, right? And this is the way that business has always been done, right? Your dollars need to make sense, right? And we are always going to be a cost-based lender. We are always going to look at the overall cost, right? Sometimes it's about the cost of doing nothing versus taking action or borrowing the money. Yeah. And we sell costly money from time to time. So the last thing that we want to do is put somebody into a situation where they're not prepared, or put somebody into a situation where they're not going to fulfill their obligation when it comes to borrowing money. Our main goal is for you to grow your business. Our main goal is for you to solve that challenge, take advantage of that opportunity. Right. And that then leads to growing business. That leads to more referrals for us. That leads to you borrowing more money in the future, right? I was just looking at a deal the other day from one of our affiliates. It came in 2 years ago. Okay. I'll never forget it because of the way that it looked. It came in 2 years ago. They've borrowed money 13 times. The first time they borrowed money, it was $3,500.
Entry level.
Yeah, entry level. Exactly. A starter offer, right? The last time they borrowed, it was $130,000. They just got a new deal for $130,000, and that's just a scratch on the board as to like what we do, how it works, right? How we can grow with a company. You know, there's different stages of the life cycle of a business, and I mean, as far as like the first 7 of the 10, you know, we pretty much exist in all of them. And then in 8, 9, 10, it becomes really creative where we can provide a solution. And Tim, this is one of the shifts I do want you to highlight is Are we not doing more business with bigger businesses than we've ever done?
I mean, I think after the pandemic, there was obviously a lot of changes that took place within traditional banking. On top of that, traditional credit applications are very focused surrounding a business owner's personal credit score. And when a lot of individuals are in their first 1 to 3 years in the business, the access to financing is not that easy, and they have to leverage their personal credit in order to get access to financing. So if you're 2.5, 3 years in and you go to your deposit bank and your utilization's over 50, 60%, the bank isn't even looking at your application because they are already not meeting DSCR or debt to income ratios. So I think in the beginning of a business's life cycle, that's one thing. And then on top of that, there's banks that are being a little bit more conservative in regards to the approvals that they're giving due to things like consumer spending and potential interest rates rising and things of that nature. So I think banks are being a little bit more conservative, even on some of these preferred industries, solely due to the fact of the uncertain times of the economy. And the stock market's doing great, but they're saying that they still may raise rates and things of that nature, which is relative towards SBA and any federal rate that's out there. So I think we're seeing more of it because banks are still lending, but they're not lending to the amount that businesses need. And when you're working with lenders that subordinate towards traditional debts, they're willing to do a lot more than what a traditional bank will because they're not going off of net income. They're going off of top line numbers that are going to help them grow that net income.
Yeah, and it could be a cash flow based product. It could be something that has an asset tied towards it. It could be a mixture of both, right? One of the things that's super interesting. I did a meeting yesterday. Actually, I did 12 one-on-one meetings, 20 minutes apiece.
Locked in the phone booth all day.
Yeah, literally, it's Tony's phone booth that day. But no, the reality is what we've seen here is, there is a shift in the marketplace, and that shift is people are still looking for access to capital. But to Tim's point, if you are a traditional lender or even a private credit individual, you also swam upstream during COVID, meaning the businesses that you were working with, if you were dealing with businesses that were 10 million in annual revenue to 100 million in annual revenue, well, now you're dealing with businesses that are 100 million in revenue to $1 billion in revenue.
There's a lot fewer of that.
And there's fewer, and you're focused on that pool though. And then if you were one of these mid-market or emerging mid-market or lower mid-market style companies, you've actually had to go back downstream to try to find access to credit, whether that be in one of the various forms that we can provide it, right? So,
well, let's bring up another point. In regards to being a fintech provider of financing, a lot of businesses don't have the 2 to 3 weeks to wait for an individual to manually underwrite their application. They have opportunities now that require financing within 3 to 5 business day timeframes rather than 3 to 5 weeks. So even businesses that maybe can qualify for more traditional senior style debts, they're still going to more unsecured style providers because of the accessibility and because of the speed in which they can work.
No, that makes a lot of sense. That makes a lot of sense. Before we get too deep into any topic, because that's what Tim and I will do, Emily, feel free to stop us and keep this thing going.
Yeah, all good. Do you think with this market shift, like where do affiliates fit into this situation?
That's a great point. I mean, as far as our affiliates go, I would tell you keep your ear to the ground because the market's going to continue to shift, to Tim's point, and make sure you're locked into the ROK webinar so that you know where to put your focus. I mean, right now, I would say, there's always this term startup that comes up, right? Everybody wants to know, what are you doing for startups? What are you doing for startups? What are you doing for startups? I would tell you it's the toughest type of lending to do in commercial finance. The people that do startup lending are converting at less than 1%, and they're excited about it. The reality is if you are somebody that's starting a business and you don't have the capital to do so, there's not many people that lend money on ideas, right? They lend money on proof of concept. They lend money on
historical revenue.
Yeah, I was going to say
cash flow.
consistency and historical cash flows. And the reality is that once you can prove that, then you open up a certain percentage of options, and the longer you continue to do that, the more options you have.
Sure.
As far as startups go directly, we work with businesses as little as 3 to 4 months time in business. To us, that's still a startup. They're still in that phase of getting going, right? So if you have a business that's making $10,000 plus a month into a business checking account for 3+ months, that's kind of our guardrails. And once you have an established business that does that, the longer and more consecutive time they spend doing that, the more we're going to be able to help and the more options they'll have.
Yeah.
right? But as far as like the flip side of things is, I would tell you, to Tim's point, and just understanding kind of the marketplace and some of the hesitation taking place at the traditional banks right now, the opportunity's never been more abundant for affiliates.
For sure. I'd say my thoughts are, no matter how small or how big the opportunity is, it's always going to be worth the conversation. Tony leads a team of over 10 individuals that are taking calls from affiliates all day, just learning more about what the specific scenarios are that they're coming across. Those individuals are coming to individuals like myself who are working with other businesses that are in similar situations. And realistically, just making sure that you're taking diligent notes and asking good questions about assets, future invoices, receivables, historical cash flow, really just learning everything you can about every opportunity that you are speaking with or every individual that you're speaking with, because there's more routes that you can go to help them with different solutions now than I think there ever was.
I think the one piece of advice that I'd leave you with is ask more questions on the upfront, and let that be the determining factor where you're going to spend your time. We see a lot of times where an affiliate will refer us a deal because they make a lot of money, right? And we love deals that make a lot of money because hopefully they qualify for a lot of money. But then we take a look at their bank account and they already have 5 loans, right? So there's a quality factor that can come in, and I'm telling you right now, the more questions you ask on the upfront, the better conversion you're going to have on the back end. When Tim and I have ever worked directly with any one of you guys or any other affiliate, we always make sure to tell you that, like, your control is sending us approvable deals. Right. Once the deal is referred to us and you know that they meet our minimums and it's kind of in line with what they're looking for, well, then the rest is on us. Right. But like, the ability to generate a quality referral comes down to you guys and understanding what we're able to do in terms of reach and in terms of getting you guys access to the capital that you're looking for.
Agreed.
Go ahead. Keep us pushing.
So there is an elephant in the room. We've done a couple webinars about this. It's quite literally everywhere. But AI, it's everywhere.
Never heard of it.
How do you think AI has started to impact the alternative lending space for clients and for lenders?
I could start on the lender side. Traditionally, as a fintech marketplace for financing, there's always been a way to come to someone like us and qualify when you can't qualify through traditional banking due to strength of your cash flow and strength of your revenue. For example, there's been scenarios where customers have been declined for any capital on the traditional side, and they come to someone like us and can qualify for up to $400,000 without showing any financials, any tax returns, anything like that, right? Now, when you introduce AI models into underwriting, it helps lenders further analyze those cash flows, further analyze their minimum balances in their bank account, and it's actually leading to us getting quicker approvals. So we've always been prone to being able to give business owners access to capital fast, but believe it or not, I think we could both say that we probably never thought that someone could give an approval quicker than 15 to 20 minutes, but I think soon, because of AI, it might be sooner than that. It might be quicker than that.
Well, and what I would tell you is we actually are API'd with a bunch of our lenders, and we do have instantaneous decisions from some of them. What's interesting about AI is people always look at it like what it's able to do, whereas the banks and lenders have actually looked at what it's able to disqualify pretty quickly, right? And that allows us to keep our focus on the deals that are fundable, right? And actually provide a better service to those types of people. And that's the interesting piece here is, I would tell you, is AI allows us to do more with less or more faster. But you still need to have the baseline of knowledge and the relationships alongside the banks and lenders that you're working with.
Sure.
You could know everything about the lender. We see people all the time in our industry that know a lot about the banks and lenders, but they don't quite convert, right? And the reality is they're not able to connect with somebody on a personal level or even a professional level.
Sure.
And understand their business, why they might be borrowing the money in the first place, and then pivoting them to the best bank or lender that services that need.
Yeah.
Right. Because the reality is the type of business you're in, the where you're located, your credit score, how much money you make, these are going to be approval and decline factors for every lender out there. But why you borrow the money is specificity, and inside of that tells us how that playbook should work for you in terms of the capital that you get access to. So for us, I would say it definitely helps. It definitely helps in terms of speed and efficiency and doing more. But at the same time, I would tell you it allows us to do more with the right people. And when those right people know what they're looking for, it's what allows that AI to move most efficiently. Getting access to capital faster is at the top of that list.
For sure. I mean, even before ChatGPT was introduced, which I think was the first AI to really become like commercially used, I used to say that we're technologically driven, but we're human intelligence powered.
Yeah.
In the fact that we're going to get access to approvals in a quicker time frame than most due to the technological advancements that we've made, you know, proprietary technology like the offer calculator and things of that nature. But on top of that, you can't just throw your specific situation into, you know, AI and think it's going to solve your problems for you. A lot of times, if you speak with an individual that has worked with other individuals in the same industry or in the same situation, getting that direct knowledge from someone that's experienced it face on, I think is always going to out trump AI. But you know, there's definitely pros and cons to it.
Yeah, I mean, you know, we've seen an increase in the AI that we use on the front end of our processes. And here's the thing: a lot of people get AI confused with automation, right? AI and automation are different things. You know, we've used AI to help automate, right? But the reality is you know, I don't see it being the end all be all. I don't see it being totally replacing, you know, teams and companies. I can tell you the companies that adopt it will move more quickly, and they will eventually start to outperform those that don't have it.
Sure.
But I think that one thing people have not predicted correctly is how fast the adoption happens. You know, I just saw something the other day, and you guys might have seen this. Elon Musk was talking about how inside of 3 years, AI will be better than every surgeon in the world. And like, even if that's not the case, right? Even if that's not the timeline, and he's right about it in 5 years or 10 years, right? The reality is at some point, if it keeps working at it, it may become better than most surgeons that are out there, right? It can be, it has that precision. It doesn't have the human error.
Sure.
And that's the powerful stuff. So things like data entry and data aggregation, you know, they're things that still have to happen and have been automated or added AI layers to it in order to speed up smart people, to Tim's point, and backed by human intelligence. Excuse me.
But I mean, I'll also throw in one thing there where I was working with a customer who had both a term loan and a line of credit approval. Both approvals were over 12 months, and the term loan was a significantly cheaper option in comparison to the line of credit approval. They were debating what was best for them, and realistically, they weren't going to pay off early. So their idea was, hey, we should take the cheapest approval because we know that we're not going to be able to pay off early. That's common sense, right? But when they throw it into ChatGPT or Gemini or any of these other AIs, it's saying, no, the line of credit is best because the line of credit you can pay off whenever you want. But in their specific situation, they were not going to be in a position to pay off early because the funds were being used for payroll. But their mind is now saying, oh, well, I think ChatGPT knows more than Timothy does, and it's kind of going against us. So I do think there's always going to be things that could kind of swing us in a different direction. But I think overall, in the end of things, it's going to help both customers and lenders alike and us as a broker be able to do more business and do it more efficiently.
Yeah, absolutely. You know, and we're all about that, right? So the better we can adopt it, the more quickly we're going to look to do so.
Sure.
The other thing that I want to point out is, like, we do have multiple versions of AI that you guys are able to interact with. Some of you might have interacted with Isabella already. Isabella is our basically our partnerships AI, right? Our partner AI. And she communicates with you guys through email, through text. We're actually working on embedding her in the portal so that you guys can have the ability to chat with her directly in the portal. And there's going to be continued investment into AI and automation on your behalf, right? One of the things we didn't really talk about was ROK's story and the fact that we were a true commercial loan broker for the first 15 years of our existence. But the last 6 have been solely focused on helping our affiliates expand their knowledge and understanding and reach into commercial finance. So that's what I would say is our commitment, is to continue to leverage this stuff, but also continue to test it and roll it out so that you guys have access to it. And I think that that's probably the most powerful thing that we can do is find good areas to use it, constantly be testing it and make sure that we're at the forefront of all of it.
I agree.
Tony, how are you seeing affiliates use AI to market themselves and to bring in more referrals?
Oh man, we see it all the time, right? We see a lot of image generation. We see a lot of emails. We see a lot of campaigns being set up and content being produced. Again, it goes back to smart humans using the AI in the right way. But we've seen our affiliates help them qualify their deals more, help them identify the customer a little bit better, right? Be able to talk to the customer a little bit more directly. You might service restaurants as somebody who does their POS systems and their credit card processing, but when they start to ask for advice about financing or having a conversation about it, you might not be ready for some of those questions. AI is a good quick baseline of knowledge. The other baseline that I would tell you to leverage is ROK and setting up a conversation with us. Somebody like Tim, let him answer the tough questions. That's what I do, right? If I got a client that needs financing, I'm taking them to Tim. I don't want to answer those questions.
I'm ready.
But no, I would tell you that our affiliates are really starting to get a pretty good grip of this stuff. We're actually going to be doing a different type of webinar next month where we're literally going to share our screen and go through how to use AI for lead generation, for qualification of your customers, and basically how our affiliates are doing this. We're going to literally not have the same setup here. I'm going to be sharing my screen on ChatGPT. So make sure that you guys are all tuning into that. We're going to compare some of the different ones that exist from ChatGPT to Claude to Gemini. And this is the fun stuff, right? Is applying the knowledge that we've gained over the last 10, 15 plus years in the business, and then leveraging it back to you guys who already have these relationships with the customers that we're never going to have the relationships with. So I'm excited for that one. I hope you guys are getting excited for it too. We'll be announcing that with the replay of this, so make sure you guys get in, because I have a feeling we're going to run out of seats on that one. I know there's a 1,000 people that are allowed to be on it, but I'm telling you that those are going to go quick.
I got a fantastic response on this one. So when I was learning the business, I always had a lot of questions. Tony's a busy guy. When he was my manager, there were times where he wasn't around. And unfortunately, I didn't have a ChatGPT to be able to go in at the time before the pandemic and just say, hey, this customer is looking for a line of credit and their credit score is 550. What should my response be? But it's more than that. A lot of us are doing marketing on social media to try to bring in referrals. We're talking on LinkedIn. You're talking on Facebook. We're talking on, Google, whatever the case may be. Somebody asks you a tough question on LinkedIn. You don't know what the answer is to that. Throw that into ChatGPT, throw that into AI, and see what the responses are.
Oh, I got a better one. Hang on. Can I interrupt? Please. I'm sorry.
Go ahead, expert.
I'm sorry. No. It's actually to build on what you don't even know this yet. Tim doesn't know this, guys. He actually just set me up so good. Hang on, right? Strap in. Make sure you attend next month's webinar, because we're actually going to be giving away a free ebook that is something that you'll be able to upload to Gemini, upload to ChatGPT, upload to Claude, and it will actually be a knowledge base about being an affiliate for ROK. So it's going to have our ICP, the ideal customer profile, the different loans that we do, what they look like. So it's going to give you the entire playbook to give to your AI agent, so that when you ask those questions, it's actually like you're on the phone with Tim, right? And to his point, the more quickly you can get to the knowledge, the more quickly you're going to be able to leverage it. And that's our goal with that.
Yeah, and I think when it comes down, I saw a few questions in the chat there about, what are qualifying questions? What should I ask customers that are reaching out? I think once you have a broad idea of, where they're located, what type of business they have, what it is that they're looking for, you can then go into these AIs and you could ask them exactly what it is that you need to qualify for some of those products. And they may be going off bank guidelines, so maybe don't go by the book on that, but at least utilize that as some basic qualifying criteria so you can continue the conversation with that one, get them comfortable enough to have a referral made to us.
No, absolutely. And if you guys are looking for more information, I just want to say this, right? One thing we're not scared for you to do is reach out to us. So feel free to call us, feel free to email us, text us, whatever it is. You guys can reach out to your points of contact at ROK. They're located in the portal if you guys have portal access. If you don't have portal access, you can send an email to info@rok.biz and just say portal, and we'll figure the rest out for you. Or drop the word portal in the chat right now, and I'll make sure that the team gets you portal access before we even and sign off today. So that's our goal, right? We want to be able to give you guys the access to the tools. We want to make sure that you guys have the resources that you need, right? If you're already meeting our customer, somebody said it before, meeting them where they're at, right? If you guys already have our customer and we're just looking to find them and they're looking for somebody like us, the easiest thing I can do is give everyone that just said portal access to the portal and make that bridge complete, right? So definitely want to make sure that you guys have all the tools that you need. So appreciate you guys, dropping portal in there, and we'll make sure that that gets taken care of. We're going to jump into the Q&A, or is that fair enough? I know
Yeah,
we've kind of been bouncing around a little bit. Let's pick some things out of the Q&A here. I see we got like
That's what happens when you have 2
40
talkers.
Yeah.
That's what happens when you have 2 talkers.
Really quick in the chat, let me know, should we do another webinar like this in the future? You guys like this layout a little bit better than some of the
been a while.
presentations and stuff? I know I miss Tim on the webinars, and Emily, you're a welcomed addition as well.
We used to go back and forth. There were even some fights in the webinars live about who was trying to talk. I'd be slapping his knee on my turn.
If you see us kick one another, that's just for fun. It doesn't mean anything these days.
All right, so what do we got? There's some questions on here. So there were questions about, do you have products for family businesses? If yes, what are the terms? I think the uniqueness about what we do is that there's individuals that come to us in interesting situations. I'm actually working with an individual right now whose father started a transportation business in the 90s. He transferred the ownership of the entity over to his daughter about 3 years ago. They run about 30 to 40 FedEx routes. And although she's only had ownership for 3 to 4 years, we're actually leveraging the original 1990 start date of that company, which is helping them get drastically different offers. So the truth of the answer to that question is that there's not necessarily going to be a Prevy offer that's given differently to someone that runs a family business versus an individual that started it on their own. But I'd like to think that if a family business has been running for a long time, anybody with longer time in business is going to qualify for stronger options.
Yeah, and we've even seen a lot of the transition of that, right? We've seen businesses that are being transitioned to a management ownership style, where maybe there'll be a founder that kind of keeps the main percentage of the business, but in order to kind of preserve things and step out of the business, he passes on a percentage of the ownership to the management team. He or she, excuse me, pass on a percentage of ownership to the management team. We've seen the transition between generations in the business. I actually remember us working on a large manufacturing deal, not that, actually more of like a distribution type of deal, but definitely in some manufacturing as well. And they were a family-run business. The daughter was actually starting to come through the ranks. She was now the CFO in the business, and they had an awesome purchasing opportunity where they were able to buy a lot adjacent to them, thus doubling their warehouse size, literally right next door to each other. The property itself was probably worth somewhere between 7 and 8 million. It was more of a handshake style deal between 2 old school business buddies, and the guy was able to get it. The original founder was able to get it at a $5 million price point because we were able to deliver him access to capital in under 14 days, right? So the reality is timing is everything when it comes to business financing. Timing will tell you your cost, timing will tell you your terms, your rates, all that type of stuff, but timing is everything, and you really want to make sure that when you have a need for funding, the financing timing is right alongside that.
Agreed. Yeah, there's a few good questions here. I think there's a few that we can even bundle with one another.
Yeah.
We got questions about defining the word fintech. Also, what do we need to fund large style businesses, even those that are publicly traded? Fintech is exactly the field that you're in. You're working in both finance and technology, and you're leveraging them together to be able to put together different options for the companies that you're working with. So the word fintech really derives from, traditionally, banks are very manually underwritten. There's literally individuals in a banking office that are reviewing applications for businesses that deposit with that bank. No matter who it is that you bank with, whether it's the largest bank, Chase, or it's the smallest bank, Kansas Federal Credit Union, whatever it might be, we leverage fintech to be able to get you access to different options by being a marketplace that works on both speed and efficiency, but also with automation and processes to get you those options very quickly.
Speaking of speed, I see another question here. I'm just going to fire at you quick. From application to funding for leads coming through affiliate partners right now, how long? Average time?
So if there was to be additional information requested, we would get that directly from the borrower. If somebody had everything in, there's options that could come in with 8 to 9 minutes. There's some that may take a few hours, but I'd say a good 1 to 2 day business time frame in regards to approval and potential closing, depending on the business's motivation level.
Yeah, and just to kind of echo that point, I would say the more that's required in terms of amount of capital or amount of paperwork can certainly kind of change that up. The one thing that I would say is we move at the pace of the borrower. You're never going to find mind us being the bottleneck. So that's our goal, right? Is to eliminate that timing gap, and really push applications to the front of the line.
For sure. You know, we as a company, we're definitely consultative driven. So a lot of what we do is getting an introductory with the borrower before going in there and just presenting an offer, because we want to make sure we can fulfill what it is that they're looking for. So, you know, one of the things that you can do as an affiliate before you submit someone to us is if you can prepare them for a conversation, just so we can really understand what their needs are, it helps us do a better job of being an advisor and presenting them the options that are being offered.
Yeah, absolutely. The aim small, miss small, right? The more you understand what you're doing, the easier it is going to be to convert, right? These are a couple of duplicates. We can keep it rolling. Let me see what else we got in here. What are preferred businesses? I've seen this one a few times. What are preferred businesses? What are some of the top industries in the market? Where should affiliates spend their time? You know, all those types of things. I am a big believer in we don't not do anything. You know, there's really we try to make sure that we have a home for every type of transaction. So I'm not going to sit here and tell you that there's any that we don't do, but some of the things that have been rattling off as extremely, warm, at least from my perspective, through the affiliate channel. At the top of the list is construction. Really specialized construction is even better, right? Think plumbers, electricians, roofers, excavation companies, right? General contractors right behind that. But we do a lot of business in and around the construction industry, and it's only increased recently. Manufacturing has been big, and this is really something that we've seen shift in the last 12 to 24 months, if I'm being honest. The reality is some of the laws that have been passed and the economy and the way that businesses have started to bring back some American manufacturing, there really has been an uptick in what we're doing in that industry. Healthcare is hot. Everybody likes to lend money to doctors and dentists and even home health care practices and insurance and all sorts of providers of that. But
believe it or not, some of the best businesses that we're helping are the ones that you're walking into every day. It could be retail locations, beauty, nail, convenience store, gas station. A lot of restaurants come to us just for general operational needs. You know, when you think about it, unsecured financing is primarily utilized as operating capital. It's capital that's utilized to help you maintain or grow the business. So when it comes to things like payroll, inventory, material costs, which is why construction is so strong, those are very, very strong use cases for accessing this type of financing.
Yeah, absolutely. And we're going to continue to explore this, right? Like the one thing that I want you guys to know is if 6 months ago we were doing this webinar, you might hear some similar things, but the reality is the reason behind why we'd be telling you this is different. So make sure you always tune into these things because they do move and they do shift, right? For a while it was tough in manufacturing, but now it's kind of back.
Yeah.
But to Tim's point, professional services, personal services, food and beverage, all these types of businesses are great. The other thing that I would throw out there with some of the professional services at businesses like, think insurance agents and real estate and CPAs, they can actually be a double dip if you're an affiliate, right? You can leverage them because they might need access to funding, right? There's plenty of times where we see a CPA buying another book of business or a real estate agency that needs some marketing capital or somebody in insurance that's expanding to a new territory. We see this all the time, but then they also service business owner customers, right? So you can always pivot them into being a referral source for you as well.
Yeah, I agree. Do affiliates get a set fee regardless of product? Is the fee calculated based on what ROK receives?
Go ahead.
So the beauty of us being a marketplace is that when we earn more, you earn more. We offer a variety of programs. Some of those programs come to us with a specific upsell. Some of those programs have the ability to be presented to the customer with different rates and different ratios. So as a partner with our platform, whether we earn $1,000 or we earn $10,000, your revenue share percentage that you earn only grows over time. So when you sign up with us, you start at a specific percentage. As you continue to work with us, generate business with us, that percentage is designed to grow. But regardless of what it is that we earn, whether it's a lot, whether it's a little, whether it's right in the middle, you always earn that revenue share percentage that you're set at.
No, it's a great point. Great point. I also see a good one here that came up in a couple different ways. What are some of the best qualifying questions to ask? And I'll leave this one up to you because I know that you're doing this every day.
Yeah, for sure. I mean, there's a lot of questions about industry. There's a lot of questions about use of funds. I think really when it comes down to it, the most important question to want to understand is what a business is utilizing the funding for, because that alone can determine whether commercial financing, unsecured financing, or what program you're going to steer them to is the right solution for them. So some qualifying questions that you're going to want to ask, you're obviously going to want to know how long they've been in business for. You're going to want to confirm if they're generating revenue, and if they are, how much revenue are they generating, whether it's annually or it's monthly. And then a follow-up question just from knowing that, which would be, in my eyes, a perfect referral, is what is that business looking to utilize capital for? Are they having a cash flow gap because of a project that they're working on that's delayed and they haven't been paid yet? Are they having a payroll challenge? Are they looking to cover inventory expenses? Are they looking to fund an invoice? Are they looking to finance a contract? So more than just getting the requirements and the qualifications of knowing that they're generating revenue and that they've been in business for at least 6 months, you're going to want to then get into, okay, well, what are you looking to utilize capital for, and can unsecured financing be a fit for you? I also like to think that if you ask them about if they have any existing debts or do they have any existing loan programs out, that's very, very important. And you can even follow that up with just, do you have any SBA or traditional bank debt, or have you gone that route? If someone says, yes, they've gone that route and they've been denied, that is a cha-ching in your head that that's a good fit for us.
Can I tell you guys a quick story, if you don't mind? I'm gonna brag about Tim for a second.
That's what we're here for.
Well, you wanted me to brag before, so I'm gonna brag now.
I'll take it.
So I remember this is a few years ago, actually. And ROK was definitely still in our startup phase. We were riding hoverboards around the office. But no, I recall very vividly one of the bigger brokers in our industry. So think of somebody that does exactly what ROK does, right? You would think this is a competitor, right? They don't work together, would be your thought process. I'm not going to name names, but they also have a team of funding individuals. They're on both coasts. They have a pretty large team.
Talking like a Ford versus General Motors.
Yeah, exactly. That's exactly what I'm doing. I'm comparing those two. However, they referred a deal to us. The deal was approved for $500,000 and they couldn't get it closed. The deal was approved for $500,000 and could not get it closed. The reason they couldn't get it closed was because the client actually needed $2 million, right? And $500K versus $2 million, sometimes it works. This time it did not. Okay, so Tim gets this customer on the phone and he starts getting a chance to ask these qualifying questions. And sometimes it's not about the qualifying question, it's actually about your follow-up question. And Tim asks the question, do you own any other businesses? Because Tim's qualifying questions told Tim, I'm probably not going to beat a $500,000 offer.
I'm not going to get $2 million.
Yeah, it's actually a pretty good offer for what you're telling me about your business. Tim asks the question, do you own any other business? And he goes, yeah, this is actually the smallest of our locations. Right. So they were making a major update at one of their locations. They're a special needs school that was expanding. They were putting up a new building. They were really adding on some different things. They actually had different tranches of the funding that they were going to end up needing. And Tim was able to structure a deal through one of our lenders that gave them access to, I believe it was $900,000 and then two $450,000 tranches, each at a 3-month mark as they hit different progress throughout the project. That's a true story. It came from one of the biggest brokers in our industry, somebody that shouldn't need to be in a relationship with ROK, shouldn't need to refer their business.
I hope they aren't listening.
Yeah, I hope they are. They made like $30,000 on the transaction, and yeah, we got a deal done that we didn't have access to. But this just goes to show you why you should work with professionals, why you need to ask these types of questions. But the reality is you don't need to ask these types of questions. You just got to work with Tim, right, and be able to do what Tony does, and that's get Tim on the phone with the customer at the right time. Let Tim do the digging. That's his job, right? So feel free to leverage us as much or as little as you'd like throughout the process. We have affiliates that are extremely hands-on in their businesses. I mean, we work with people who are outsourced CFOs that work in the business each and every day. Yeah. And then we work with people that are extremely hands-off. I saw somebody mentioning before, how can an affiliate who generates their leads through social media, things like YouTube videos and ads like that, increase their conversion or increase their qualifications a little bit. I would tell you it's all about how you position the funding, right? A little bit goes a long way, right? So if you say things like no minimum credit score, you're going to see people with bad credit. But if you tell them, hey, credit is a factor, despite there being no minimum credit score, credit will affect your rates and terms.
Sure.
Somebody who has extremely poor credit might see, oh, let me look at these other requirements and just make sure that I'm a fit for those types of things. So there's a lot that goes a long way. There's always an ability to assist the right type of customer, but you got to remember you can't help everybody every time.
For sure. But on that topic, I'd say one of the best things that you can do is if you are actively referring deals to ROK, you have someone like me that is working on all those opportunities that you're bringing in and scheduling a call with that individual and getting direct feedback from them on, hey, this referral didn't work out because of A and this referral didn't qualify because of B. That could then help you refine what you're marketing. So if you're finding out that everyone's getting declined because of their credit score, maybe on that next advertisement, you move from no minimum FICO to 550 plus FICO. Or maybe you find out that all the businesses you're bringing in have ideas and they haven't started generating revenue yet. Maybe you boost your ad from 10K a month to 20K a month. And you'll end up finding that, yes, you may be bringing in less, but at the end of the day, if you're converting more, that's all that matters to you and us as well. So
this is a great question. What about business credit? Do we need to be concerned with that? Or are we more interested in the business itself and the deal that they're trying to get done?
At the end of the day, when you're speaking to an individual, you want to be interested in whatever it is that they're interested in. Realistically, that's what's going to draw them to want to work with you.
It's a
right?
good point. It's a good point.
That's How to Win Friends and Influencing People by Dale Carnegie lookalike right there.
Yeah.
So when someone comes to you and they have questions, realistically, do we offer programs that report to business credit, and do we have programs that solely look at business credit? Yes. So if someone was to have challenged business credit, we're not going to work with those providers that are very business credit based. Whereas if you do have someone that has great business credit trade lines, we're going to work with someone that does Previ looking at business credit. And there are going to be programs available that do report to Paydex, DMB, and things like that, Equifax Commercial. So I think when it comes down to it, when you're having a conversation with the business, genuinely speaking, no matter what it is that they're interested in, show interest in it as well as an advisor and as a consultant for them. And then when it comes to us and presenting those programs, we'll be sure to properly advise them on if individuals are qualifying for programs that report to business credit or if business credit's going to pertain to their application, et cetera.
Yeah, and just to kind of piggyback that one point, what I would say is this is what makes us different than working with a bank or a lender directly, is they're going to give a more direct yes or no answer. For us, it truly depends, right? There's some of the banks and lenders that we work with that this will 100%, if somebody has poor business credit, disqualify them. But that doesn't mean that they're totally disqualified at ROK. And that's kind of the difference between us and everybody else. I would tell you that anything negative can always affect a commercial finance application, and you never really know what a bank or lender might ask for. It's not about the initial round usually, right? That people can't qualify on. It's usually on the, hey, can you prove that, or can you prove this, or can you do that, or can you do this, right? That's kind of the way that things work when it comes to commercial finance applications. What I would say is, this is why we exist. Feel free to leverage us. Feel free to leverage our knowledge. And if you have somebody that's looking for a product that does report to business credit, yeah, we have those. Term loans, lines of credit, equipment finance, and some of the other products we offer as well. Love it. There was one other question I thought I saw really quick. Oh, there it is. Don't even need to move. There's a question in here about ITIN. Where are we at with that today? Because this is something that moves, guys. We have done it. We have not done it. We've done it. We've not done it. Where are we at today?
So when it comes down to it, there's individuals that hold ITN that do have access to credit. There's some that don't have access to credit, and that plays a very important part within the lending process because you can have an ITIN number and still qualify for credit cards and auto loans and things of that nature. So when you're thinking about a business lending process, yes, we are revenue and cash flow focused, but when it comes down to it, there is some layer of credit that comes into play in making a decision. If someone was to get approved that had an ITIN, they would have to have proper documentation, proof of citizenship, passport, things like that. But there definitely are applications that we can take. I'd say that a lot of lenders are kind of bumping the requirement to $20,000 per month rather than $10,000 per month.
I was even going to say higher than that, so you're being nice.
Just because of the restrictions in regards to kind of who they're willing to lend to, and a lot of times ITIN individuals having a little bit more limited credit access. always worth a conversation with the BDO that you work with or the advisor that you work with directly.
Yeah, and you know, this kind of makes me think of other challenging industries, right? Some of the ones that you know may not get talked about or all the shine all the time on webinars. You know, we do some lending in the cannabis space, right? We've done lines of credit, we've done equipment, we've done all sorts of different types of working capital and term loan products within that industry. But the reality is, right now, if you want access to credit in that or lending in that industry, you're looking at close to like a $300,000 or $500,000 per month minimum revenue needed for an industry like that. And when you have specific questions, we can give specific answers, right? That's what's fun about a webinar like this is when you paint a picture of like, hey, how does it work with an ITIN, or how does it work in this industry, or can you guys help with this product? It always gives us a real small look at how to answer your question that much more impactfully.
Yeah, absolutely.
Really quick, feel free to drop any last minute questions in the Q&A. We'll try to do some rapid fire here, Tim and I, you know, and get some of your questions answered that we might not have had the chance to answer. I did see before, what's the minimum loan amount? What's the maximum loan amount? We'll do a loan as little as $5,000 to $10,000. And right now we're somewhere between 10 and 20 million on the high side of things. So think of us for anybody that's looking for less than 20 million in funding. You know, and the beauty of what we do is we don't just do it one way, right? So we see deals all the time that come from affiliates where they need $10 million, but it ends up being 5 million in this, $1.5 million in that, and you know, 3.5 in a different type of lending. So there's all sorts of different scenarios and different ways that we can help, and we're excited to do so. But definitely want to make sure that you guys have the information that you're looking for.
Yeah. Thankfully, I do actually have a closing call at 3 p.m. for one of our affiliates with a lender relationship, so I'm very excited about that.
So we got to wrap this thing up. Is that what you're telling me?
Kind of subtly.
Does the portal tell us what minimum docs to provide with submission? This is a great question. The portal not only does it, but so does every landing page. And this is a quick plug to you guys that might not know this. Every affiliate gets an automatic landing page that's coded to them. And if your client fills that link out, it will then push them into further into the application process. So based on how they answer the short form, it will then collect their application. It will allow them to either connect their bank or upload their bank statements. It will request any additional documentation, all based on how they answer that quick short form. There's training videos, there's marketing materials, there's all sorts. Yeah, there's co-branding, all sorts of information in the portal. If you guys need an updated portal overview, I suggest you either reach out to your BDO, or once again, you can drop portal into the chat right now, and we'll make sure that somebody at least reaches out to you in regards to that. We definitely want to make sure that we get your questions answered. So I know that we didn't get to answer everybody's questions. Please feel free to jump on our website, give us a shout, call us now. My team is waiting. Tim and his team are waiting. You got to wait till 3:30 for Tim because he's got a closing call. But no, we're excited to chat with you guys. We look forward to doing our next webinar just like this one. And as we always say, keep rocking, everybody.
Am I invited to the next one?
Of course.